Did you know the VA offers pensions specifically for low-income wartime veterans, even if you don't have a service-connected disability? It's true. This often overlooked benefit is a financial lifeline for thousands of veterans and their families, yet so many people don't even realize they qualify. The VA pension can help cover basic expenses, medical costs, and offer a sense of stability in retirement or during periods of illness. Hi, I'm Sam Ross, founder and CEO of Claim Climbers. My mission is to make sure every veteran knows about every benefit that they've earned. Because you know what? You served, you sacrificed, and you deserve real support. Before we get started, don't forget to like, subscribe, or follow our channel. You'll get up-to-date guidance on VA benefits and learn about programs that can change your life or the life of a veteran you love. Let's start by clearing up a common confusion. What's the difference between VA pension and VA compensation? A lot of people hear VA benefits and immediately think of disability compensation, the monthly payments for veterans with service-connected disabilities. That's important, but it's not the only option. VA compensation is strictly for veterans who can prove their disability or health condition is directly related to their military service. The more severe the service-connected disability, the higher the compensation amount. VA pension, on the other hand, is designed for low-income veterans who served during a period of war, regardless of whether their disability is related to military service. You could have no service-connected disabilities and still qualify for a pension if your income and assets are below certain limits. To sum it up, compensation is for service-connected disabilities. Pension is for low-income wartime veterans and certain survivors, no matter what caused your disability or financial hardship. Eligibility for compensation requires a clear link between your disability and your military service. For the pension, it's about your service dates, your age or disability status, and your financial situation. Now, let's go deeper into who exactly qualifies for the VA pension and how does the system work. There are three main pillars to VA pension eligibility. First, wartime service. You must have served at least 90 days of active duty with at least 1 day during a VA-recognized wartime period. For those who served after September 7th, 1980, the requirement is usually at least 24 months or the full period you were called to active duty. You do not have to have served in combat, just during the wartime window. Second, age or disability. You must be age 65 or older, permanently and totally disabled, living in a nursing home, receiving Social Security disability insurance, or supplemental security income. Any one of those things can qualify you. Third, income and asset limits. The VA looks at your annual countable income and net worth. Currently, the net worth limit is around $155,000, but that's for today, so make sure to always check for the most up-to-date news. But this does not include your primary residence or your main vehicle. If your unreimbursed medical expenses are high, they can be deducted from your countable income, possibly making you eligible even if your gross income seems too high on paper. If you're worried you might not qualify, don't self-disqualify. Sometimes medical bills or care costs make the difference. It's always worth checking with a veteran service officer or running through the numbers on the VA's online tool. Next, let's discuss how much financial support the VA pension can provide and how it's calculated. The VA pension isn't a fixed amount. It's calculated to bridge the gap between your countable income and the maximum annual pension rate, or MAPR. The MAPR varies depending on whether you're single, married, have dependent children, or qualify for special categories like aid and attendance or housebound status. The VA looks at your total household situation to determine your target income. Each year, you'll need to verify your income, assets, and unreimbursed medical expenses so the VA can keep your benefit at the correct level. You'll receive monthly payments intended to raise your income up to the MAPR. For example, if your MAPR is $16,000 and your countable income is $10,000, the VA will pay you $6,000 over the course of a year, split into monthly payments. This means your pension can increase if your care costs go up, your spouse loses income, or your health needs change. This is flexible support designed to make sure you do not fall through the cracks. Let's review some final tips to help you get the most out of these benefits. Keep meticulous records of your income, assets, and all medical expenses not reimbursed by insurance. Make sure medical documentation clearly spells out your care needs, whether it's for daily activities, supervision, or mobility. Don't go at it alone. Engage a VSO or accredited representative early. They'll help guide you, answer your questions, and ensure all the forms are done right the first time. If your health needs change, apply promptly. Increased needs for care might qualify you for more money, even if you were previously denied. Reapply or update your records every year to make sure you're not missing out as your financial or medical situation changes. Remember, being proactive beats being reactive any day, and it's the key to getting and keeping your VA pension. At Claim Climbers, we don't file pension claims, but we're here to help with medical documentation and support your journey. If you need expert medical evidence to back up your VA disability claim, Claim Climbers is ready to help. Visit claimclimbers.com to get started and learn how we can support your claim. Remember, your service and your family sacrifices matter. You've earned these benefits. Don't let anything get in the way of receiving them. I'm Sam Ross, and I appreciate you spending the time with us today. Stay strong, stay informed, and I'll see you in the next episode. Take care.